Boom, we are live, ladies and gentlemen. Thank you for joining us today. It's been a little while since I was online, but we're going to cover some fun things that took place this week. I'm going to talk about Bored Apes. We're going to talk about Bitcoin, clearly. Some of our favorite things, apparently, in hot topic conversation right now. Also going to go quickly through a few of our thoughts in the gaming sector near the end of this as well, but we're going to start with mostly Bitcoin fundamentals. Remember that you can find us at arcanebear.com. And if you're ever interested in what we're investing in the play to earn sector, you can click on Wu Wei here up at the top and you'll see a list. These are investments where we've made and we are sitting on for basically time continued into forever. Now, the investment thesis we like to share is try to keep things simple. So what we're going to do here is we're going to start off with a little bit of fundamentals. So you guys will remember this one. This is the Bitcoin percent balance on exchanges. Why do we look at this? It shows us the level of volatility that we can expect from the market. Now, every step we go lower in the amount of Bitcoin that there is on the exchange, the more volatile the price movement becomes in either direction, depending on the slip between supply and demand. Now, we are actually largely in a demand scenario, and we have to remember that more patient money, and I'll move my face over the side so you can see where the bottom of this chart goes. The more patient money in an ecosystem is going to make things move slower. You know, if you go back to 2017, you look at the up and the down between, let's say, 17,000 down to 3,000, up to 13,000, down to 3,000, and up and continuing on outwards into 60,000. That period of accumulation was volatile, and you want to be accumulating throughout the entirety of that range. And that's one of the unique aspects about the trading range. So we're actually in what I believe to be a very large trading range. And we've gone over this by explaining what we believe to be taking place is a much larger accumulation cylinder. At the bottom, you have the S&P 500, and above that, you have Bitcoin in gold. The reason why this is interesting is because the S&P 500 was considered to be in a bear market or a collapse between 2001 and 2008, and it was saved with money printing. This is one of the things we want to have to keep in mind about the printing of money, is that it is necessarily a function of the value of assets to the upside. They go hand in hand. Now, which assets are better over the long period of time? That's always a good question. And that's what we're trying to figure out here, which is why the S&P as an index is what I'm using against Bitcoin. Even though the time variations are different, it's a very, very strong signal, in my opinion, that we are seeing an accumulation range. And based off the large scale buys that we've seen, and what we're going to look at here, a degradation of the supply in the market, when you have this kind of consistent downtrend, where we have basically bullish divergence, where we have a decreasing supply line, orange at the bottom, and an increasing, and my face is in the way again here. So ladies and gentlemen, that's right. I should actually just always maybe leave it in the top left corner. There we go. Try that out. So the orange line at the bottom here is the supply, top gray line is the price. As the supply decreases, the price has been gradually increasing. And this to me looks like a beautiful, beautiful setup. And the time that we're taking within these areas, again, is for the accumulator. And these are for large scale interests who are month over month buying and accumulating assets. And they're great to have around. Especially in this market. And what that leads to is a further look and deep dive into the rest of the fundamentals here. And this actually very well coincides with the gaming sector, which we'll lead into, but let's just take a look at a broad spectrum of our charts here really quickly. So stock to flow ratio, how much Bitcoin is being produced, how much does it cost to buy and sell, and what is the average return of rate of investment for all the gear that goes into that. It's kind of easy way to look at the stock to flow model. How much does it cost to produce and how much is being bought at that cost. And we've been doing this really interesting accumulation range below the price line. Again, this to me indicates that there's a smarter, more patient investor that's able to just systematically put buy orders in that keep the price kind of rising higher and higher. So I think we're seeing something quite unusual to the other frequencies that we've had with Bitcoin and its supply. So because of this, we want to be as patient as possible, understanding that there is a high likelihood that the market itself has learned a new level of patience due to those larger, longer term investors. So we go through the reserve risk ratio too. Basically everything across the board is saying we are in a buy zone, right? And whether it goes a little bit lower or not is basically irrelevant. Yes, it could go lower, but at a systematic relationship, if you just keep executing buys, now again, we're highly focused on the play to earn sector because we think there's the most interesting potential for the on-ramp for billions of people there at the moment into things like Bitcoin. We want to use this, at least in my opinion, as the reserve currency of the world. Just feels good. It felt like a sovereign free choice money when I first found it, and every day we go forward into it, governments can't stop you from using it aside from the traditional on-ramps, and it's a pretty unique function, and it wasn't designed to do that, but that's a happy side effect. And when we have side effects of liberty and capital, it's always a positive that we're looking at for the underlying fundamental of, let's say, movable assets as well. That's a very unique function. How do you move assets? Okay, so the R-HODL ratio, again, just across the board, we're seeing almost near accumulation cycles. Here, ratio is a little bit off, but we're looking at a mid-cycle accumulation, right? So remember, with the way the S&P 500 operated, both times, the 2001, the 2008, appeared to be a collapse. Like, people are like, oh, it's the bear market's about to start, we're going to go way lower. And again, oh, the bear market's about to start, we're going to go way lower. And people kept calling for a bear market all the way out as the S&P continued to rise. As a matter of fact, a lot of economists talked about, oh my God, it's going to keep collapsing. Like, every year it was about how the market was way too overpriced and they were printing way too many dollars. And we've gone into our thesis based with the money supply that you can see the growth of the stock market is basically a function of the increase in inflation of the dollars. So assets are always a better place to park your capital than holding US dollars, because dollars as a currency are basically like a wire. They're designed to lose, as there's friction. They're not a capacitor, they're not a generator. Currency is a loss-filled signal. And you don't want to hold your capital in areas where there's clearly signal loss, and the US dollar is one of those things. So the reason we're using the S&P 500 here is we believe it's more like a basket of technology to some degree or another over the last 40 years and the growth of that. And a lot of people we're so much overpriced from 1994, that both of the collapses were actually not collapses at all. They were just the bottom of a trading range that was taking place. And this I think is exactly what's happening with Bitcoin. And again, the fun, exciting part is when we start to go through all of our fundamentals, it's basically popping off. Now, there's another fun one that they added here. We'll go over. It was their trend score. I suggest that one. We shared it in the private den. We'll leave it at that. But I also wanted to look at this one. I thought this was a much more noticeable signal. And this was the dramatic increase of wallets that hold over 1,000 Bitcoin in the last few weeks. So since March or February 20th, basically the start of Pisces, there's been an increase of Bitcoin wallets that hold over 1,000, balanced by around 200 to 300 people. So not a massive increase, but in comparison with the rest, you're talking about a significant increase. So it's relative, I guess, at this function. Overall, we've grown a lot since 2018. It's actually grown up dramatically, and we haven't risen much out of that yet in comparison. So you're seeing a level of accumulation here too. The number of wallet addresses is slowly getting smaller, and then all of a sudden, just at the click and the turn of the price, this number starts to increase dramatically. So we're also seeing personal activity mimic this bullish divergence, right? Where you're seeing a falling accumulation range, and then the price starts to stub up, and all of a sudden a massive amount of wallets increase over 1,000 mark. So it's being done systematically and quite well. So anyways, I thought that was kind of fun. The last few things we wanted to go over was that if you're doing research on arcanebear.com and you want to see some of the things we're interested in, one of the ones that's about to launch next is Dropp. Now, remember, we think venture capital is fun because we're exploring a new space and the potential of what these ideas can do over a decade. Venture capital in this sector is one of the most unique things ever. The idea that someone could be buying Matic relatively easily in any foreign country just 2 years ago and participate in the growth of an idea that is valued at billions of dollars now is a really, really unique function of the financial system right now. So we're super excited about venture capital ideas in the AR, VR, and metaverse sector, more so because it represents a new type of digital identity, and that's really interesting to us. One of the things I didn't see was through the pontification of the Bored Apes, which has done amazingly well, more than the Capital. When I saw the Bored Ape DAO and the conversations that Maria and Farouk and Yat were having together, I got really excited about governance potentials of seats within communities, boards of these DAOs, and how you can build a brand community. And that was one of the things I didn't really see with the Bored Ape idea. I've been kind of on the fringe of culture the entire time, so being this close to it this time was almost a little weird, but they did fantastic. I've been super impressed by everything that this growing community has been able to create together. So that was really inspiring. The other thing that kind of jumped out on the plate was C2X. We got a last minute ping from a friend sharing their C2X's story. I think again, when you're looking at making investments, one of the things that's hard to recognize is when we first got Matic on the IEO on Binance, it went down 80% from that entry price for like 2 years, and it stayed at that for around 2 years afterwards. So buying in at the IEO was not necessarily the best term, but when you're making an investment, you should aggregate your investment over time anyways, because it's going to create conviction as you grow to understand the communities that are involved here, right? Sometimes it might blow up in front of your face and you not recognize it at the last minute, like I did with Bored Apes, which was fantastic. I love that I've learned something now. So we'll leave the links for C2X down in the video below, and hopefully we'll be able to line up some more content, which you'll find on arcanebear.com. So you can just read some of our deeper thoughts here. But we like to follow a few different companies as they grow, these studios that are building. So we'll do a deeper dive here over the next few days. But again, I've been playing more video games, and I'll try to explain this as succinctly as possible for everyone. And I love video games, but what I'm really interested in is the potential for generational participation of network effect. And that's a kind of an abstract idea, right? You can achieve it in multiple ways. I think video games have some of the most stickiness alongside social media and content sharing and creative artistry effectively. So watching these niches grow, one of the things that's unique about the game is the accessibility. It's a lot harder to become a great musician and provide music for the community. Whereas playing a game, you have this kind of a tendency of a large amount of people to just continue to play. So I think it's a really important aspect here of impact financial on-ramps. So that to me is one of the reasons why we're so fascinated by this sector. Yes, the video games are fun, and we think that's a reason why there's so much stickiness here. You've got a lot of great investors. And a really interesting idea. So we're gonna see if we can get the team on and have a chat in the next week or two as time goes on. But again, always make sure you're following the correct social media channels more than whatever I'm talking about. Make sure you're taking the time to slowly go through and make sure you've got their names right, whether it's dropp with two P's or over here it's a C2X_world. Yeah, the crypto space is developing very quickly, and there's all sorts of ways to get lost down the rabbit hole. So just be patient and remember that just getting in the IDO, you want to be patient and build conviction with an investment. And this is one of the better ways to go. We don't promote trading necessarily. Just when to get in the market is always a good place, and when to kind of de-risk as well, depending on your circumstances. Sometimes with venture capital, I think de-risking is a bad idea. I think you should pretty much always hold on to everything. But it depends what you're trying to do. If you're building, you're always going to want to continue to invest in your own building structure. So navigate those waters, being the most or the least frugal when people are scared shitless, and being the most kind of taking profits is a difficult one, especially when you're dealing with asymmetry. It almost always leads to you should have found another way to work and just kept investing, because outpacing the gains of some of these asymmetric growths of what came later with Matic was very difficult unless you focused on just maintaining positions for multiple years and potentially into decades. What happens if you're right for 2 or 3 decades and you entered and exited a position with 2 or 3 years? You're going to feel so silly afterwards. When do you get back in? Anyways, it's a fascinating thought. So I thought you guys would enjoy some of that. Check out C2X and check out dropp. yeah, developing interest in how these communities grow and share together too, which I think the Bored Apes again really got brought together well. So if you haven't seen this video, go check it out. We retweeted Yuga Labs and Animoca as well. Such a fun video. What a fun ride they're putting together there. I really appreciated that. And yeah, follow us on Twitter and YouTube and all those other fun spaces. Great to be back. We'll do more videos. I know I always say that, and I end up doing the exact same amount of videos I've done since I started the channel, which is randomly and every other week on Mondays, Wednesdays, Fridays, Saturdays, Sundays, and Tuesdays. So we'll see you guys again soon. Thank you all. I appreciate the support. Let's deal with the Arcane Bear. Wait, hold on. All I got to do is press a button, and it's like an outro, right? Bam.